We're going to take a quick look at 3 stocks. 2 are going to be in the cybersecurity market, which I think is pretty cool. And the third one's going to be one in the software kind of 3D content creation market. And today's episode, we're going to take a quick look at some of their fundamentals and what I believe are some cool future growth potentials for each of these companies. If this is your first time here, make sure to hit the thumbs up. Make sure to hit the subscribe button. Check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So remember, market has been pretty crazy, and we can see the 3 stocks we're going to take a quick look at are first Autodesk, that deals with 3D content creation to some extent. Then we're going to take a quick look at Varonis. This is a pretty cool cybersecurity company. And then we're going to take a quick look at Crowdstrike, which just reported earnings and it's up a nice amount. But we can see from all-time highs, these stocks have still taken quite a beating. Crowdstrike is still down over 33%, Autodesk is down over 41%, and Varonis is down over 43%. And I don't want to get anchored to these prices just because these are prices off their lows. I don't believe they're going to rise to those levels anytime soon, but it just tells me, hey, Jose, a good portion of the valuation risk has been eliminated. And that's what that shows me when stock prices have kind of gone down from all-time highs. So again, we're going to take a quick look at fundamentals. First, let's just take a quick look at trailing 12 months revenue. Autodesk, all of them, you can see constant strong growth in trailing 12 months revenue. Crowdstrike, they just reported earnings yesterday. So their 10Q report isn't updated yet. So it's not here on Y charts, but be assured that their trailing 12-month revenue continues to go up as well. So these are all growth monsters. If we take a quick look at quarterly year-over-year growth, Autodesk is, I want to say, a little bit more mature, but it's still growing, I want to say, in the low to mid-high teens from time to time. Most recent quarter grew about 16.5%. Varonis is a little bit more in the growth stage, right? It's in the most recent, in the past few quarters, it has actually grown around the 30%. And now if we take a look at Crowdstrike, it's continuing to grow over that 60% growth rate. This most recent quarter, it actually grew 63% in revenue again. So strong growth moves for all these companies. Next, I wanted to take a quick look at their fundamentals, right? Are these companies producing cash flow? Do they have a nice amount of cash? How much debt? So first, let's start off with Autodesk. Autodesk does have a nice amount of debt, about $2.6 billion, but this is one that also has a nice amount of cash and short-term investments and is super profitable in cash flow from operations. So because of that cash and that cash flow from operations continue to be super positive, it allows me to kind of overlook that long-term debt, especially how this is one of the leaders within this market. If we take a quick look at Varonis has a nice amount of cash, very little amount of debt compared to cash, and it's at least breaking even in cash flow from operations. So again, none of these so far have me worried in form of fundamentals. Next, if we take a quick look at Crowdstrike, again, this is not looking at the current numbers currently. They are a bit better, but last quarter they had strong cash and short-term investments. They have very low debt compared to cash, and they are also positive in cash flow from operations. Those numbers in cash flow from operations and in cash have increased a bit. So again, fundamentally, all are looking pretty good. Let's take a listen to today's sponsor. I want to thank the Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So now let's just jump into each stock. So for those not familiar with Autodesk, they are a software company that helps kind of during the design and build process of architecture, engineering, and construction. Also in product design, anything that you have in your household or anything from your devices has to be modeled somewhere, has to be designed, has to be tested, and Autodesk really helps out during that product and design manufacturing. The third segment that they really hit, and this is probably my favorite segment, the media and entertainment. I think right now we are in a content boom. Autodesk has this program called Maya that really helps out during the overall creation of content, being regular film, being animation, being gaming. And I believe this is a small market, but one that I believe will continue to grow. Here we can see in their most recent quarter, engineering, architecture and construction are a big portion, but the one growing the fastest is right now the smallest, and that's the media and entertainment. Most recent quarter, it actually grew 39% compared to the same time last year, and for the full year of 2022, it grew 22%. So that is a market that I think investors should really keep an eye out, especially most recently in January 19th, Autodesk acquired a company called Motion, which kind of increases their overall tools for the media and entertainment. Right now, Autodesk is what I call a great toolbox. I enjoy companies that are a toolbox, not just a tool, because I've kind of said it earlier, it's easier to throw away a tool than it is to throw away a whole toolbox. So Autodesk, I think, has that strong lead on it. The other thing, like I mentioned, content creation is happening. New games are being built. I mean, right now, the kind of transformation into digital art via NFTs as well. All these streaming content companies are always designing new originals, trying to make new products. Autodesk is kind of creating a toolbox for that market. They also gave us a revenue outlook guidance for the full year of 2023, and we can see billings. They expect that to grow up 22 to 25%. Revenue, they expect to grow in the mid-teens, and they are super positive in free cash flow from operations. So Autodesk, definitely one to keep an eye on. The second one we're going to take a quick look at is Varonis. This is traded under the NASDAQ as ticker VRNS. Current market cap of $4.4 billion, and it is in the cybersecurity market. With the market cap like this, we're going to see the company has pretty cool products, but with the market cap like this, I could also see Varonis being a play in the acquisition way. I wouldn't invest just because it's a potential acquisition target, but I do believe the strong products plus that other acquisition target possibility makes it a strong look right now. So Varonis is a cybersecurity company, and where most cybersecurity companies kind of handle in endpoint security, Varonis kind of focuses on data security, which is a bit different. And I want to say it kind of helps it not compete with some of the other players like Crowdstrike we're going to take a look at, which is more endpoint security. Both these kind of cybersecurity companies can work pretty well with each other. So I do want to say, if you want to learn more about Varonis and this kind of data protection service, Varonis has a pretty cool YouTube channel this is the video. The Varonis Data Security Platform is 2 minutes and 46 seconds long, and it does a really great way of explaining how its cybersecurity management is different from some of these competitors. If we take a quick look, why to invest, most recent revenue, Q4 annual recurring revenue grew 35%, 33% in total revenue growth, subscription revenue grew 53%. Two markets, North America makes up over 30% of total revenue. Europe, Middle East, and Africa also makes up over 30% of total revenue. So it kind of tells you, hey, they are not really, it's not just one country that's really helping this company grow. They are spread out into numerous continents, so they have that international exposure. They also have over 35 plus licenses to sell. And if we take a quick look, this is a pretty cool key performance indicator that I was looking in their most recent earnings. As of December 31st of 2021, 73% of customers with 500 employees or more purchased 4 or more licenses. That is insane. 63, that's up from 63 a year ago. And they also see 41 have purchased 6 or more licenses, up from 30% as of December of last year, right? So I believe that shows a confirmation that this is a product right now that can continue to grow as the years progress. The final company we're going to take a quick look at is Crowdstrike, another cybersecurity one. And this one does it a bit different from Varonis. This one focuses more on endpoint security. Again, I definitely would recommend checking that video out so you can see a little bit of the difference between the two. But Crowdstrike is traded under the NASDAQ as ticker CRWD. It did have great earnings today, and it's up 14.4%. I wouldn't recommend chasing a stock at these price points, but at least keep an eye on if it kind of gives us some form of better buying opportunity. And if you do want to chase Crowdstrike at these levels, I would say I personally would do it more in a dollar cost averaging way where, yeah, sure, maybe I might enter at a heavy price right now, but maybe next week or the week after that, I might actually get a better entry point. So with the pull up like we've seen today, this is not the time where I would go all in, but I wouldn't put Crowdstrike outside the map gap just because of this pull up, right? All right, so a few things I wanted to mention out of CrowdStrike earnings that really caught my attention. First, ending annual recurring revenue grew 65% year over year to $1.7 billion. They had a net new addition of about $217 million this quarter alone, and that was one of the highest additions they've ever added on a quarter. Not only that, what I thought was also super cool is the amount of subscribers that they grew. They added 1,600 new subscription customers in the quarter. Now they have a total of 16,300 subscription customers. So in one quarter alone, I think this is insane. In one quarter alone, they added more than 10% of total subscription customers. I think, again, year over year, that was a 65% growth. That alone is super impressive, but quarter over quarter, it grew over 10%. I think that alone is another strong feature. Another thing I do enjoy about CrowdStrike, and this is probably something that doesn't get talked a lot, is CrowdStrike launched Falcon Fund 2, a $100 million investment vehicle in partnership to focus on cross-stage private investments within the cybersecurity and relevant adjacent markets. And this, I really do enjoy this. And the reason being is cybersecurity is such an evolving market. This is a market that you need to be continue innovating and have engineers working at their fullest levels, right? And CrowdStrike understand that, hey, they have great engineers and their engineers are doing everything possible to make sure their products are leading edge. But unfortunately, this is a market that is evolving too quickly that they need to also make sure they are ahead of the curve in other ways. So they have this kind of investment vehicle to make sure that they are in the cybersecurity market with some of the biggest and top leading edge technologies. So this is a great way. I really like how management did this. Again, cybersecurity companies right now might be a bit overvalued, but there might be a reason, right? I do believe the cybersecurity market will be one that should be very, very well within the next 5 years. So in the short term, CrowdStrike and Varonis might be highly valued. In the long term, I do think 5 years, these two have potential to provide great returns in my portfolio. Out of these three stocks, I only have CrowdStrike in my portfolio, but I am intending to add Varonis and Autodesk are definitely in my watch list, and those are two. If I talk a little bit less about them, I'll most likely start to add them in my portfolio. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.